Hello, Strato. Are you still around?
Yes, Olivier. So
we
can start.
You will introduce the forum, or I go on?
Let me introduce the forum.
Okay.
So good evening, everyone on this portal. My name is Nyirinde Kwestrato. I'm principal examiner of ICPAD and the moderator for today's session. Today we are with Olivier Mokwaneza, the tutor and experienced lecturer for financial accounting, financial reporting, and advanced financial reporting. So today's session, we are on last day of training or revision session. We expect to have a session which is interactive. Everyone has to ask a question. We can skip any step once everyone is satisfied for any explanation given. So Olivier, your floor is yours.
Okay, thank you very much, Strato, for that brief introduction. Dear students, good evening. I'm Olivier Mugwaneza, as Strato has said, and I am being chosen by IFRS to be the tutor, provide tips to pass this exam. And as you might imagine, this exam is coming soon. We are very close to the exams, and we should get prepared. So this session is really to help you to see what you need to consider as you revise, to see what the topics are, to see what maybe the concentration may be on, and maybe also to give you some tips, which tips normally when you're doing an exam like this one, you should have in mind. What should you try to do, and probably what you should not do. Now, a quick snapshot of what we are going to have in our presentation today. In our discussion today, we are going to share one, we look at the subject prerequisites. This is important because we need to understand what we actually should have learned. Number two, we are going to look at the aim of this subject. Number three, we're looking at the learning outcomes, subject content. We then, after looking at the subject content, we look at the content. If you look at this specific subject, it has up to 5 topic areas, and those 5 topic areas, as per the syllabus, I hope you consistently check your syllabus as you revise. Then I will talk about exam tips after I have gone through a brief overview of each topic. Ideally, of course, as you might understand, maybe we will not be able to go into the deep details, but probably just giving you a guideline of what I think you should look at, what I think you should consider, and probably when we reach to the exam tips, I'll be basically talking about what you should bear in mind as you revise, that is currently, but also what you should bear in mind when you attempt the exams, that is during the exam when you're doing the exams. Now, discourse prerequisites. I think that you all have done financial accounting, but even if the financial accounting might have been exempt for you, which I think for most of us here, it's not the case because the exemption have just come for this sitting. So I just believe that we all have done financial accounting. If not, then we have done financial reporting. These are very key for you to pass advanced financial reporting because most of the things have been covered under financial accounting or financial reporting. For the advanced financial reporting, as you might know, it's a little bit the application, it's a little bit the interpretation, it's a little bit the communication of the financial report. So when you have been able to do well in your financial accounting as well as in your financial reporting, this should be actually easy. It should be easy because you're trying now to go to a level, let's say a level of a CFO, and as a CFO, you're trying to communicate to the stakeholders what the financial reports are about and how the company has performed, what is its position, and maybe its cash flow, and you're trying to do it even in case of complex situation like complex groups. Now, this prerequisite, if probably you have something of, you think there is still maybe something you didn't fix well, you probably might consider revising some of those that you cannot find in the material for advanced financial reporting. Now, looking at the aim, what is the aim of the subject? And this is actually extracted straight from the syllabus. You might have read it even before. Normally, we want you to be able to apply the appropriate judgment and the technical ability in the preparation of financial statements for complex business. The focus here will be on complex situations, and as you might have seen in the past papers, most of the past papers, if not all, you will find that there is a question which has 50 marks, that is a half, which looks at complex groups. It either brings in a group with a subsidiary and a sub-subsidiary, or maybe it will bring in a group with an associate. And if you look at its additional information, they will try to go into deep of the standards, whereby they might even give you a foreign subsidiary, and you have to apply IAS 21, or they give you additional information which relate to share-based payment, employee benefits, and you really need to have actually that as a very important consideration. Complex business entities, you should be able to understand those complex situations and be able to do questions that relate to them, attempt them, and try to see if you can report even in a complex environment. We're also looking at you being able to evaluate and communicate the impact of current issues and development in financial reporting, those who may not have the technical expertise. There are several current issues, some of them that pertain to the standards. There are also issues that have to do with the current economic environment. Like, for example, if you look at the current situation of COVID-19, how does it affect financial reporting? Maybe what should the entity consider that maybe they have not considered earlier? Those issues, as maybe an expert, as you have technical expertise in the area of accounting and reporting, you should be the one to help businesses to overcome challenges around that. Now, the running outcomes are as many as you can see. I'll probably go through them quickly. What you're expected of, you're expected of to be able to analyze and evaluate financial statement at the end of this module, when you pass your exam, then you should be able to do that. But you should also be able to write detailed report. I will maybe touch on that in my presentation, writing detailed reports, because some students probably are not able to see a question that asks them to write a report, and you might find they have asked you to write a report about a given issue in a financial statement, and probably some of you don't even start with a good introduction. You don't identify the problem. So probably I will touch on it when I reach to answering questions that relate to reporting and standard. Evaluate and discuss the main accounting issues currently facing the professional accountant in the field of financial accounting. I have talked already about the current issue of COVID-19, but we also have new standards coming in. We have, for example, Ifrs 17 as a new standard, but we also have previous current standard like Ifrs 16, which is about leases, and Ifrs 15, which is about revenue and recognition of revenue from contract with the customers. This has been asked probably in the last sitting, and again, you find that probably some of the students have not yet grasped, they have not yet maybe gone into those new standards. So you should be able to know what are the new issues to deal with and what are their effects on the financial statement. Another thing you have to do is to demonstrate the appropriate professional judgment and ethical sensitivity of issues in the financial statement. And all this have to do with the outcomes. Earlier on, maybe I should have taken you through also other outcomes, being able to apply and explain the acquisition method of accounting and related disclosure requirement in the financial statement and not interpret and apply international financial reporting standards. Obviously, all of the standards that you need to know as per the syllabus, I will mention them, and probably as I mention them, I will tell you maybe the most that are focused on at this level, because as you might imagine, not all these standards are given equal prominence at this level, because some of these standards have already been tested either under financial accounting or they have been tested under financial reporting. So when they are tested at this level, it's probably a issue that regard to reporting, communicating to the stakeholders, but there are those that have not been tested earlier. Standard like IAS 19, IFRS 2, and probably mostly IAS 21 is tested at financial reporting level, but not in deep detail. So it might also be tested here. IFRS 5 should also be a focus here. So the standard, you should know probably where you can put the focus. And it is also presumed that since you remember those that have been tested maybe at the level of financial accounting or financial reporting, you can easily also answer any question that relates to them that might come at the level of advanced financial reporting. Now, if you go to the subject content, what are the contents that will help us to achieve this learning outcome that I've just talked about? Content number one, here I will not take much time on it. I'll just mention what you need to consider. Content number two, or topic number two, is of international financial reporting standards. Probably here I will mention some considerations that you probably might need to make on some standards and not all, because if I go into all of them mentioning what you needed to consider, then we probably might talk about that one and leave the others, and we can't even finish it alone in this time limit. The other one is about preparation of financial statements, and here I should again emphasize it's in a complex groups, complex situations that we are trying to look at this preparation of financial statement, because probably we might say you have already prepared the financial statement, you know how to prepare, maybe publish the financial statement from even financial accounting to financial reporting. And at this level, because under financial reporting, you considered the topic of consolidation, but at financial reporting, as you might know, consolidation was at the level of maybe a parent and a subsidiary and an associate to some extent. But here now we're talking of a parent that might have a subsidiary, more subsidiaries, a sub-subsidiary, or even cases of maybe disposal, step acquisition. And when you consolidate, when there is a step acquisition, well, how do you consolidate when there is disposal during the period? All those issues are complex in nature, and those are that is the focus. That's where you should focus. That's where you should normally put your much of your time, because as I told you at the beginning, if you look into the past papers, you will find that there is a question that bears 50 marks. 50, that is a half of the exam, and your focus should be there, even though, of course, you should not ignore the other topics. Then we talk about analysis, evaluation, and interpretation of financial statements. This has to do mainly the syllabus indicate we should know ratio analysis, which at this level, I guess we are at a good level, and maybe any of us can be able to calculate the applicable ratios depending on the question that they can bring to you. And the most important thing here is, at this level, do you really understand that when you calculate a ratio, what does it mean to the business? And if you compare that business to other businesses, how is the business fairly performing? Is it good? Is it bad? How bad is it? How good is it? And maybe considering other dynamics in the business, maybe what should be done. So at this level, you should be at that level of analysis, not only calculation, but also analysis. Look at the analysis through time and analysis, look at analysis between companies, and be able to provide your standing and what you can advise the management to do in case of a given a ratio calculated. Then lastly, we have emerging issues. And as you might also have seen, under the syllabus, the syllabus does not tell you what would be covered under emerging issues, but you can yourselves imagine that these are maybe example which is given there. These are new standards, that's one. If not new standards, then probably we're talking about the new economic environment and its effect. And those are issues also you need to know, or you need to consider. Now, let's go straight to our topic one, regulatory framework. I told you this one will not take much time. I'll just go through what you need to consider. And when you look at the regulatory framework, the regulatory framework, we go from maybe the general or the international to the local, and we're talking of maybe, if you look at the regulatory framework around financial reporting and advanced financial reporting, we need to know, for example, the processes of International Accounting Standard Board. That's point number one. What is the role of International Accounting Board? More specifically, what does it do? Maybe did you read about the due process, which I know at this level you have considered? How do they come up with a standard? Do you know the 6 steps that are normally considered up to having a standard in place? If yes, then you're good. If no, you can consider what are the bodies that take maybe what are the specific organs that take international accounting standard board, which I also know you have considered them under your financial reporting. You need to probably consider relooking or considering these issues when we got to international public sector accounting standard board. Now, this is also another board, but which is specific to public sector. You know that public sector standard, international public sector accounting standards are developed, some on a cash basis, others on a accrual basis. But if you look at a country like ours, Rwanda, where we are now moving to full accrual, but we are under modified accrual basis, how are we maybe complying with Ifrs, and what does normally the International Public Sector Accounting Standard Board require? Also, how does it come up with the standard? You need to consider those issues. There are several sources. It's not only ICFA material. You can also go to the website of these organs, to the International Accounting Standard Board, to the International Public Sector Accounting Standard Board, and consider their processes. For example, if you have done your financial reporting, you might have considered how some questions were asking on the process, on the consultative groups that are consulted by the International Public Sector Accounting Standard Board. So you probably need to consider all this and know about the standards in detail. Now, you also need to, of course, I've talked about this point number 2, while talking about this point number 1, the steps in developing international financial reporting standard, how the due process, for example, I've mentioned it, so go to the public sector and see how it is done, and look at the International Financial Reporting Implementation Committee, what does it do, and what are the IFRS, and what do we have as IFRS, and probably try to inform yourselves. It has not been probably a practice task on the IFRS. There is also nothing that says it can't be there on a syllabus. You need to consider looking at it. And since we all know that accounting as a profession, it is a profession that adhere or that requires ethical or adherence to ethical standards. So when we report, what are ethical issues involved? What are ethical issues involved? In most cases, if you have to consider ethical and legal issues, what are those? What are scenarios? If they give you a scenario and maybe you have to comment on whether there is a legal issue or an ethical issue, let's say, for example, you are an accountant, you have to report what you want you to do as an accountant. You should observe ethical issues. Let's say, for example, you don't just do report in a way, maybe you want to increase shares of a company by using creative accounting. That would be unethical, not only but unethical to the stakeholders, looking at the stakeholders at large. So ethical and legal issues in reporting should also be considered. You should also consider the company law relating to the preparation of financial statements. And here we are talking of company law. It's normally related to private sector. And maybe we know that currently the company law requires that we follow international financial reporting standards. And that's why international financial reporting standards become relevant, and we study them. And maybe when ICPA is setting exam, also has to examine the extent to which we understand those standards. But also when you look at the public sector, we have international public sector accounting standard. And currently we have the PFM manual that is out since 2019, July. And probably you need to consider that PFM manual as one of the regulatory framework we have. Because if, for example, you're working in a public sector, that is something that you should be knowing. But even if you're not working in the public sector, for the purpose of this exam, you should know what does the PFM manual, what do we continue to report on accrual basis, sorry, on a cash basis, and what has gone on accrual with the current, within the current public PFM manual. Probably under the legal framework, you also need to consider what are the applicable laws. You know, the organic law of 2013 and the ministerial order of 2016 on financial regulations. Those are also documents you need to consider, because one of the area that will be tested is public sector under this specific advanced financial reporting. And if they test you on public sector, whether theoretically or practically, you should be able to really know what is that applies. What is it that applies currently? And if I tell you PFM manual is one of the guiding documents, but also you can consider, for example, if a question comes to preparation of financial statement, maybe can you be able to look at those financial statements and how they are prepared, and if you maybe you are asked to interpret or comment, you know, even in the format. For example, you can also consider IPSAS 1, which mirrors IAS 1, and be able to answer. So the regulatory framework does not only look at the standard and how they are developed, it also looks at the legal issues, the company law, those documents I was referring to in public sector, PFM manual, the organic law, the financial regulations, ministerial order. You need to consider those and be in a good, maybe in a good situation to be able to answer a question that might come out of here. And as you might imagine, if a question has to come out of this topic, then most likely it's theoretical question. And if you did not read about it, probably it's an open book, but I will talk about it when I go to the exam tips. But as much as it's an open book, a theoretical question might maybe escape you, because probably you did not prepare, or you did not even know that they will ask you about that that law, and probably you did not even come in exam with it, even if it was an open book exam. But did you maybe come with that law? If you didn't know that it's one of the laws that can be tested on, probably you didn't consider looking at it. But again, it's good reading ahead, because when you go in the exam, even if it's open book, you have 3 hours and a half or 3 hours and 45 minutes, where 15 minutes are normally not for the exam, but for reading the questions and trying to understand them and the instructions. So you probably need to read ahead. Now, topic 2 is very important. It's a very relevant topic, because even when we go to other topics, we consider the International Financial Reporting Standard. Now, if you look at the topic 2, you might wonder, what do I take? What do I leave? That is, I think, the question which is even difficult to answer from my side. If I have to advise you, what do you take? What do you leave? I'll say that you are lucky, because probably much of it has been covered under financial accounting and financial reporting. And probably if I had to tell you what to take, I would say focus on what you don't know. Focus on what you didn't cover under financial reporting and if on financial accounting. And if you did maybe you had difficulties on some of the standard under financial reporting and financial accounting, you probably need to reconsider that. Now, this slide here, it's showing the standard that you people are supposed to know before you come to this exam. And I'll say that you cannot actually memorize, and if you had to bring this standard in the exam, and you print them, they go up to almost more than 4,000 pages, and you cannot bring those pages in the exam. So the advice probably is, can you take maybe each standard and know at least 4 or 5 things about it? Maybe if, let's say, you look at IAS 1, do you know probably that IAS 1 is the content and the format, and what are those content and format of the financial statement? Do you know that it tells you that the content and format, for example, of IAS 7 cash flow are not covered, because statement of cash flow is a statement, but no, it's not covered in IAS 1 in terms of format and content. So that's very important. For each standard, at least know something. It's always good know even the title. If you have not had a time, but at least you know the title of a standard. And since this is an open book, maybe you will know, okay, if they have asked this standard, it is about this. Let me check if I can get the answer out of maybe the question that has been asked. So if you can look at this slide, IAS 1, this is something you have already considered, and it's about presentation of financial statement, that is financial statement. This one you have covered it since financial accounting, financial reporting, and is also requirement here, because of course here we are still preparing financial statement. We have not stopped preparing financial statement. So you should remember those principles that are in IAS 1, going concern, the accrual concept, the consistency, and try to remember what they mean. You should also consider the issues of the content that if you present financial statement, you need to identify the name of the company, the title of the statement you're preparing, the currency, the level of rounding off, all those issues, the format, what do I put under maybe statement of profit and loss and other the revenues, how do I classify the expenditure by nature and by function? How does the classification by function differ from classification by maybe nature? And when I go to the statement of financial position, is there any format expected? If not, what are the elements that I find there, the asset and liability? What are the relevant standards that cover those elements? All those issues, please try as much as possible to remember them. IAS 2, importantly, how do we come up with the cost? This is also something we have already covered earlier. And you probably need to look at IAS 2 and try to say, my inventory, I know how to account for it. If they ask me anything that has to do with the cost of inventory, I know what to include in the cost of inventory. If probably they still ask me about the method of valuation, the FIFO and weighted average, I know. And if they ask me about the principle of cost and net realizable value, all those issues you need to consider. It's also a case of concern at this level, specifically here in questions of at this level, they might ask you to prepare consolidated statement of cash flow. And since it's consolidated statement of cash flow, it might even be a question that comes under part 1 or section A, where you have a comparison question that bears a lot of marks. So you cannot say you will do this question under consolidated complex financial statement if you have not considered previously the statement of cash flow, which is basic. So you should recall the operating activity that relate to the activities of selling and purchase, those operating activity of a entity, like cash may be paid to the suppliers, cash received from customers, cash paid to employees, cash paid to other operating expenses. Those are cash flow from operation, but when you're looking at it from maybe the direct method, if you look at it from indirect, is also under IAS 7, probably we are trying to adjust the profit and change it to cash by adjusting. What we adjust? Do you remember the issue that we adjust? The issue to do with non-cash expense, like depreciation, like loss on disposal, profit on disposal, forex gain and losses. That might have been accounted for in the P&L because we start from the profit before tax, because the any other that might have been accounted for under other comprehensive income might not have affected that profit before tax. So do you remember those issues if you are to adjust, including adjustment for working capital changes like change in inventory or change in receivable, change in the payables, and in the case of complex maybe a situation, they might give you a question where the acquisition has taken the acquisition of the subsidiary has taken place during the period, and if they give you financial statement of, for example, the consolidated financial statement, financial position at the beginning, and statement of financial position at the end, and there has been acquisition during the period, probably you need to consider the fact that the statement of financial position at the beginning, which is consolidated, did not include the subsidiary which is acquired during the period. So if you have to compare the financials at the end, maybe you are looking at tracking changes in operating activity. You are comparing, for example, inventory at the end with inventory at the beginning. You should understand that inventory at the end actually includes the subsidiary that has been acquired during the period. But inventory at the beginning does not include it. And those two are not comparable. Before you can look at the change in the inventory, you need to consider how much inventory has been acquired from that subsidiary because the acquisition took place during the period. For example, that is a case of complexity, and maybe it's similar to disposal. When there's disposal, we normally say we deconsolidate, and if we deconsolidate, probably the statement of financial position at the end might have already removed the subsidiary, but the one at the beginning was including the subsidiary. So how do we compare those figures, taking into account the disposal that has taken place if we have to prepare the statement of cash flow? So that is an example I was giving in the case of operating activity, but also have we call investment activity. If you go to investment activity and there has been acquisition, for example, of non-current asset, disposal of non-current asset, those related to investment activity, and if there has been acquisition of a subsidiary during the period, that acquisition of the subsidiary is acquisition of a non-current asset because it's an investment you have made. So what is the cash flow that relates to that acquisition? And what is maybe apart from the cash out, what the effect of the goodwill and non-controlling interest? Goodwill probably you will need to adjust it from operating. It's an investment. Goodwill is in operating. If in any case there's any adjustment that relates to it, let's say in terms of looking at the impairment loss, and you need to adjust for that impairment. How do you adjust that? You also need to check, for example, non-controlling interest as an effect of the acquisition or disposal. What is the change in the non-controlling interest, and how is the new subsidiary non-controlling interest affect the calculation of cash flow that relates to non-controlling interest in the financing activities? When you got financing activity, of course, if there has been acquisition of the subsidiary, for example, by issue of share, that issue of share, maybe you will see the share capital has increased from the beginning to the end, but does it mean that there has been cash flow? Probably no, because it's acquisition of the subsidiary. When you acquire subsidiary and you issue share, there is no cash out. and sorry, there is no cash in, and you might consider not putting any cash inflow under your financing activity. So you see, it's just one standard, but the fact that it is asked at an advanced level, it brings in complexity that you need to see if you can really be able to adjust. You need to remember the basics, the operating activity, investment activity, financing activity, cash and cash equivalent. But at the same time, you need to consider those other complex issues that come in of acquisition of a subsidiary during the period, of disposal of a subsidiary during the period, and of course, the cash flow implications that go with it or come with it. And you need to really be able to adjust those issues. And probably IS8, you have considered it. You know, the IS8 is about accounting policy, the change in accounting policy and accounting estimate. And tell us, how does it affect the preparation of financial statement? This one, I think you have considered it already. IS10, event after the reporting period, maybe if also at this advanced level, there is an event that happens. For example, they might give you a scenario where they tell you but it has been acquired after the reporting period, or it has been disposed after the reporting period. If that is an event, does it portray conditions that existed at the reporting date? And probably you need to also check that and try to really remember what it is that you need to adjust. You have also considered as well, trying to quickly, maybe reminding each of this standard and what it relates to. I'm not going into maybe telling you the deep details of each, but at least to still caution you on what you really need to go back and revise if you did not revise before, and you meet a scenario in the exam, how you could treat. Test 12 has to deal with income tax, and it has component that talks about current tax, whereby the current tax we say it's an estimate and it is estimated, but once estimated, it is an expense that has to be taken. And if your expense has not been paid, it will be reported as a liability. You also have considered the fact that since income tax might be an estimate, it might have been under provision or over provision in the prior period. So if there has been under provision or over provision, that under provision or over provision has to be adjusted on the current income tax expense, either by increasing the income tax expense if it is under provision, or decreasing income tax expense if it is over provision that was made. That is on current tax. When you go to IS 12 under deferred, you need also to remember how a deferred tax arises. A deferred tax arises because of the temporary differences. And the temporary differences are to be considered. And you should remember, when do I say temporary difference is deductible, maybe temporary difference, or taxable temporary difference? Because we know a deductible temporary difference creates a deferred tax asset, while a taxable temporary difference creates a deferred liability. So how do they differ? For example, if we are talking of you having made a revaluation maybe of an asset, maybe you made a revaluation of an asset while acquiring a subsidiary, and when you made a revaluation, it created tax implication, and that implication you have to record it in the books. So you will record the acquisition of the subsidiary, but also after recording the acquisition of the subsidiary, you have to look at fair value adjustments that you have made, and you see it has tax implication, and you create a deferred tax liability. So those issues should be considered, and you should remember how to deal with them. Yes, of course, they ask you because, as I told you, these standards have been considered earlier, but they are still applicable even at this level. IAS 16, for example, talks about property and equipment. Do we still remember how to deal with the acquisition cost? How do we determine the initial cost? If we measure it at historical cost, maybe how do we calculate accumulated depreciation? That one I think you already know. But if an asset is measured at historical cost and another is measured under the valued model, how does the valuation model or the valued model differ from the cost model? If I am under cost model and another is reported under the valuation model, how will our financial statement maybe differ? And what is the implication? For example, if you have to make implication of two companies that are reporting at different models under IR 16, and probably the impairment that led to the historical cost and even the valuation model, because we say if you report an item, it should be carrying amount should be the cost or maybe cost minus accumulated depreciation minus accumulated impairment loss. And impairment loss probably is considered in another standard that you should also know is applicable under IR 16 by looking at the amount that we put in the financial statement. So all those issues, you need to record them and record the issue of transfer from retained earnings to revaluation surplus or revaluation reserve. In the case of revaluation model where we have revalued asset and we have calculated depreciation, which became higher than what should have been if there has not been revaluation. Those issues you need to record them. Then there is IAS 19, which is about employee benefit. This one probably you have not seen it earlier, and that's why I have put it in red. And it's something that you need to focus on because at this level it has been tested a lot, and it still can be tested. So, for example, do you know how to account for current costs that relate to employee benefits, and that is current employee benefits, well, the current service maybe cost, and maybe post-employment benefit? Do you know how to account for post-employment benefit? Is what we call a plan asset. How do we determine that plan asset liability? How do we determine the liability that relates to employee benefit? You know, in this standard, there is a way you look at the future benefit that an employee will probably get, and you want to record them in the current, even though there is that future implication, but you want to recognize them currently because even if they will be paid in the future, but they relate to the services that the employee has provided in the current period. Now, if that is the case, those future costs, probably you need to discount them and record the liability as a discounted value. So do we know how such discounting takes place and how it affects the current costs as well as the plan asset and liability that might come due to those future costs? So all those issues have to be considered. Under IAS 19, you need to look at how the plan asset that is kept like an investment in most cases to be able to pay the future employee benefits is constructed, how it is arrived at, and what do we add on coming up with that plan asset, what do you less, maybe the benefit already maybe paid, how does they affect the asset and the liability, current service costs, how do they affect the asset and the liability? These are issues you need to consider. And as I told you, this is one of a focus area because it's a standard that probably has not been tested earlier in financial reporting or financial accounting, the prerequisite that I started with. You also need to look at IAS 20 as I continue on this standard. IAS 20, as you might know, is about government grant, how we recognize. You might have considered it also under financial reporting and yes, financial reporting more specifically looking at grant from government, and you have seen that grants from government, they are either given to entity because the entity wants to cover expenses or because the entity wants to acquire a non-current asset. And if grant relate to a non-current asset, you have seen that you have two approaches that you can use as per IAS 20, whereby one approach is a deferred approach, where you recognize the asset as a whole, the value of the asset as a whole, and you recognize also the grant as a whole. And as you depreciate the asset, you also amortize the grant, because if you recognize the grant, you will recognize it as a liability, which is deferred grant income, and you will keep reducing that liability from time to time, year in, year out, whereby those grants will be recognized initially maybe as a liability, but keep reducing the liability to income statement or profit and loss account and other comprehensive income. And as you do so, you see the grant is IAS 20 requires that you classify the grant into current and non-current components, and the current component might be the component which will be amortized in the next 1 year. So for the asset, you can also use an approach where maybe the asset, as you look at it, maybe you don't want to recognize a deferred grant. You just take the value of the asset and you deduct the grant as a whole. So you will only recognize the net amount on the asset in the balance sheet in the non-current asset. And if you do so, both approaches have maybe similar effect on the P&L, because if we recognize a deferred income, you know, you will recognize income and expense the depreciation. And the net amount is the same if you use the second approach, where you have taken the total amount, deducting it, deducting the value of the grant, because the depreciation in that case will be the other net amount which was in the first approach. If it is relating to expense, you can recall that under IAS 20, a grant related to expense, you have to identify whether expenses are of the current period, past period, prior period, or future period. If the expenses related to prior period and current period, you recognize the grant immediately as an income in the P&L. But if the expenses are for future period, then you have also to recognize a deferred grant, and you will only take that grant to income once you have reached the year in which those expenses will be incurred. So that one you still need also to remember, and also see cases where probably the grant might be repayable if you did not satisfy the conditions, and maybe you have to repay the grant because you did not satisfy the condition, and what happens. So that one you should also recall, just in case, because at this level, probably they will not ask you much details, but they might ask you to make a report on such issue like grant. And if you write a report, you have to be careful on remembering what is really the IAS 20 is saying and how to apply it. IAS 21 has to do with the foreign exchange gain and losses. We are looking at foreign exchange transaction and operations. And we're looking at a case where, for example, you import or export, and maybe you're using a foreign currency in those transactions. How do we record them at maybe the date of transaction? If, for example, we say you are importing from, let's say, UK, and you have paid, you have not yet paid, you probably took a credit from a UK company, but you will pay in pounds. If you will pay in pounds, by the moment you import and you have to recognize a payable, that payable will be recognized at the spot rate, at the date of that transaction. Let's say it's in October, but maybe the financial statements are prepared in December. And when you look at the rate in December, it's totally different from the rate which we have in October. So you see, because of that change in the difference between the rate of October and the rate of December, it creates gain or losses. So how do we recognize those gain or losses on that transaction? Because at the date of transaction, we had recorded maybe at a given rate, which was prevailing at that transaction date. And at the end, IAS 21 tells us the monetary items like a payable, because monetary items as IAS 21, they are defined as those cash and cash equivalent, for example, and any other that has characteristic of a payable or a receivable. So payable is a monetary item. When you translate it at the end, you use a crossing rate. So a crossing rate in December is different from a transaction rate in October. So those two rates, if they are different, you have to compare them and the difference and recognize the gain or loss. So how do you do that, and how do you recognize that gain or loss? Of course, maybe increasing that reliability or decreasing reliability depending on the behavior of the rates. And in that case, you should remember how to recognize those gain and loss on those transactions. But IAS 21 does not only stop there. It goes now to the issue that might be a bit advanced, which at this level, because we said you should be able to deal with the complex issues. If, for example, they give you a foreign subsidiary and the foreign subsidiary has been acquired, and probably you have to consolidate it with the maybe the parent, and they tell you the foreign subsidiary, as you might imagine, because it is like an autonomous entity, such foreign subsidiary, we know all the subsidiaries are autonomous. It will report in maybe a currency in its country where it has operations. So let's say you have acquired a subsidiary in Kenya and you are in Rwanda. That subsidiary is Kenyan shillings. If you consolidate, you will not consolidate Kenyan shillings with the Rwandan francs. If your presentation currency, you're presenting your financial statement in Rwandan francs, obviously you have to translate from maybe in the first place from the foreign currency, which is the Kenyan shilling, to Rwandan francs. And if you're lucky that the functional currency, your functional currency is the same as your presentation currency, then you will only translate from that foreign currency to functional currency, and it is the same as the presentation currency. But sometimes you might even translate from foreign currency to functional currency, and from functional currency to presentation currency. So what are the rules that apply when we are translating from a foreign currency and to a functional currency and to a presentation currency? You know, a foreign currency, of course, is the currency of another country where you have that operation, like in Kenya, a Kenyan shilling. The functional currency is the one that actually dictate or affect mostly your economic activities, economic transactions. And a presentation currency is the one that you use to present financial statement. So when you're translating, for example, that foreign operation, a subsidiary, before you consolidate it, you need to know, maybe for income statements, I will use these rates. In most cases, for income statement, you know, we use average rate, or no, we might use spot rate. In exam, mostly it will be use of average rate. And when you go to monetary item, like in a balance sheet, the balance sheet item, you will need to use in most cases the closing rate. But some item that are measured at historical costs or fair value, you might use a rate which was there when the fair value was determined, or the rate which was there historically when the acquisition had taken place. So which method of translation are you using in terms of translating, and how, if we get again, because as you translate using different rate, for example, you have translated income statement item using average rate, balance sheet item that are monetary using closing rate, and maybe balance sheet item that are non-monetary using historical rate, or the rate which was there when we determined the fair value. Those rates are different. So they will cause differences between the credit and the debit of the trade balance of the subsidiary before you consolidate it. And you have to recognize that gain or loss. So how much is it and how do you recognize it? Those are issues you need to consider and know whether you take that under P&L or under the other comprehensive income. You really need to know those issues, because at this level, this IAS 21 also becomes more relevant when you are at standard. There is also IAS 23, which talks about borrowing costs. We know borrowing costs relate to financing costs, if I can say, because they are costs that we pay because we have got finance from somewhere. In most cases here, we're talking case of like interest expense that we have to pay because we have taken a loan maybe from a bank, or interest we have to pay on the debentures or bonds that we've issued. Now, the borrowing costs in most cases are taken to P&L, but IAS 23 talks about cases where borrowing costs might be taken to the not to the P&L, but rather they should be taken to the cost of the asset if we have a qualifying. Now, if you have a qualifying asset, you might need to take it maybe to that qualifying asset cost, the borrowing cost. So you take the borrowing cost and add it to the cost of the asset. You need to remember a qualifying asset. What is it? Borrowing costs that get capitalized, what are those? And also, if they get capitalized, when can I start to capitalize? The date of capitalization, what is the capitalization date? If I have invested some of the fund, I get investment, how do I do this? So you see, in most of these cases, all these issues you need to remember and look at if there is a question about borrowing costs, if you need to capitalize them, and if you need to capitalize them, when and how. You, as I can see, the time is also running, and I have to leave some time maybe towards the end. And these standards are too many. I will maybe go quickly, maybe to mention that some of those you need to consider them. Again, IAS 24, you need to consider it. The related party and IAS 27 is separate, but IAS 27 has to do with the separate financial statement for consolidated financial statement. Parent company separate financial statement. How do we deal with the if we have investment in subsidiary, how do we report them? So that is IAS 27. We need to consider IAS 28 brings in associate. Maybe here, because associate is one of the area which is tested, you need to emphasize on the method of accounting and how it works. You know, under equity method of accounting, we say any investment which goes between 20 and 50, we say you have a significant influence. And IAS 28 gives cases where significant influence might really be manifested, like having representation on board of directors, maybe exchanging with that associate with the management personnel, maybe having significant operation or transaction with that associate. That might be some of the manifestation of a significant influence. And if you have a significant influence, you report an associate. So in some question, for example, they might give you a subsidiary and an associate, and you need to consolidate. You know, the associate, you will not consolidate it, but you will report it using equity method of accounting. So you need to recall how it works. There are cases where students are given a question to attempt, and they are given an associate, and you find some of the students have taken the associate and they have also consolidated it, which is totally wrong. The associate is never consolidated. That is, it is not added, because we say, as per Ifrs 10, that we consolidate the parent and the subsidiary. So we add everything. We add assets and liabilities of the parent with those of the subsidiary. We add income and expenses of the parent with those of the subsidiary. But for the associate, it's not the case. We only look at our investment in associate and we report it at its cost plus any post-acquisition share of profit in associate. And it's a single line item on a balance sheet. And when we go to the statement of profit or loss, we also bring a single line item. We don't add income and expenses. We look at our share in associate. Share of profit or loss in associate, if you have 40%, we'll calculate that 40% and bring it on the face of the consolidated statement of profit or loss and other comprehensive income. So you need to be careful and look at, if you're in an exam, the associate will be identified through the percentage. If you're in exam, can you identify that if they have given you, let's say, 3 companies, that one company is an associate? And since it's an associate, you don't need to consolidate it, but you need to report it as per equity method of accounting, using equity method of accounting. Then IFRS 3 also has to do with this topic of consolidation, because and it's the one that brings in the acquisition method, and that's where we know how to calculate the goodwill. Goodwill calculation using fair value method or using proportionate goodwill method. So under which circumstances you can use proportionate goodwill method. Of course, you know that under the case where you have non-controlling interest fair value, you can use fair value method. But if you don't have non-controlling interest fair value, then you will use partial goodwill method. So try to remember that, and how the calculation of goodwill, the acquisition, when we acquired, did we use maybe on acquisition, if we acquired, did we use cash to acquire? Did we use a share exchange? Is there a deferred consideration? And if there is deferred consideration, you get the cost of investment, you need to discount that deferred consideration. Those issues, you need to reconsider them and remember them very well as we prepare for this exam. Fair value measurement, whether it's for an asset or liability, you know what is the fair value and how to determine it for asset and liability, IFRS 13. So I didn't go into IFRS 10, as you can see. I will go back on it when we go to topic of consolidation, because in the preparation of financial statement, a focus is on that. And more particularly, I didn't mention IFRS 10 because I believe the process of consolidation is well covered under financial reporting. Probably what you need to deal with is those complex issues. As 29, reporting in hyperinflationary economies, how do you deal with maybe such cases? You need to remember that IAS 32, IFRS 9, and IFRS 7, these ones are taken together because they relate to financial instrument. Here, 32, you need to remember presentation, know what is an instrument, probably the issues of financial asset, financial liability, and equity instrument. A compound financial instrument, how do you differentiate equity and liability? That one you need to recall. IFRS 9, how do we measure and recognize the instrument? That is recognition and measurement. Is the amortized cost, the fair value for an asset, fair value through profit or loss, and fair value through other comprehensive income. For liability, fair value through profit or loss and amortized cost. IFRS 7 talks about disclosure. You need to recall that. IAS 33, you know, this is a standard that is applicable to public entities when you are reporting, but other entities might opt to also use IAS 33 so long as they follow IFRSs. So also reconsider the calculation of basic earning per share and diluted earning per share. What is new when you are to calculate diluted earning per share and the basic earning per share? And you continue all these standards, as I told you, because of time. I see most of these are standards that you've considered: payment loss, provision, intangible asset, IAS 40, investment property, biological asset, IFRS 1, first time adoption, and probably IFRS 2 is new, also another area of focus. Share-based payment is also another area of focus where you need to see how do we, if there is share-based payment, how do we report it in the financial statement? And you need to be able to differentiate from maybe what we call cash settled share-based payments and know how it differ with the fair value or shares settled operations and how they differ and maybe how they affect the P&L and how they affect as well the statement of financial position. IFRS 5 has to do with discontinued operation. It was previously under financial reporting, but under the new syllabus, I've seen it is no longer under financial reporting, but here it's there. That's why I've highlighted it, but most of you might have covered it. Non-current asset held for sale, disposal group, and discontinued operations. You might have considered them. Under what circumstances do we report a discontinued, for example, operation, and how do we report it? Maybe do we report it separately? Income statement, do we report it together with continuing operation? Those issues you need to remember them. IFRS 8 segment reporting. Now, under segment reporting, if you get there, how do you report them and which segment can be reported, the threshold that are there, and then the current standard that I was talking about, IFRS 15 revenue recognition. Here you need to record the 5-step model. How do you go about a 5-step model? And IFRS 15, you need to know does combined what was under IAS 18 revenue recognition and what was under IAS 11 construction contract, because now we can look at them, all of them under IFRS 15, and you need to see what we call receivable versus contract asset, and also a contract liability. When we are talking of contract like construction contract, income approach, how are they used to determine the degree of completion, cost approach, how are they used to determine the also level of completion, as well as any other thing to do with the revenue recognition in the 5 steps. The 5 steps, you know, you have to be able to determine there is a contract with the customer. Is there a contract with the customer? I've seen that when they asked it at financial reporting, most of the students cannot record those 5 steps. So the first step of looking at, do I have a contract with the customer? The transaction price as another step. Can I allocate the transaction price on a performance obligation? Do I know those performance obligation? All those steps, you need to record them such that if they ask it, you can be able to consider it. There's also IFRS 16, which talks about leases. You know, leases here, what IFRS 16 has mainly changed has to do with how we account for leases. In previously, the operating leases, most of them were classified as operating leases and were accounted for differently from finance leases. But here, except maybe a lease that is under 12 months, otherwise the leases actually have to be accounted almost in the similar way, where the lessee is required currently to recognize both the asset and liability, where under liability has to differentiate between current component and non-current component. So you need to again consider this and be sure you really understand how this and the issue to do with the recognition of the risk value, and that has to do with the calculating the present value of minimum leases, including the ungranted residual value or granted residual value. Those issues actually affect the computation or the calculation of the present value of minimum lease or the value of liability to recognize at the beginning for the lessee, depending on whether those, of course, the ungranted residual value is ungranted or is granted residual value. You need to reconsider this. Now, this standard, as you can see here, it's difficult to memorize each and everything. Even for myself, sometimes some of them I still need to reconsider what they talk about, having taken a lot of time actually teaching these from time to time, and you need to keep revising them. And as I told you, the secret here is at least to try for each of them, know what it covers and what is important, maybe 2, 3, 4 things about that standard, and keep them in mind. And probably if they ask you a question out of it, out of that standard, you can easily be able to recall. And since this is an open book, maybe you can use what you have and try to relate with what you have already read, and easily find your way out and answer the question that has been put to you. Now, we cannot go again into maybe the details of IPSAS, but I can tell you that if you know the International Financial Reporting Standard, most of them, if you go to IPSAS, you will find that the International Public Sector Accounting Standard have been developed based on IFRS. And if you know the IFRS, it's easy also to understand the IPSAS. For example, if you look at this slide, IPSAS 1 can be related to IAS 1, the presentation of financial statements. IPSAS 2 can be related to IAS 7, cash flow statement. IPSAS 3 can be related to IAS 8. IPSAS 4 can be related to IAS 21. IPSAS 5, borrowing costs, can be related to IAS 23. And you continue, you look at each of these. For example, of course, some of the IPSAS, like IPSAS 15, have already been subsidized by others. Like we also know that some standards keep being replaced with others, subsidized by others. Like I was saying, IFRS 15 currently has superseded what was there as IAS 18 and IAS 11. So IPSAS 15 has also been replaced by IPSAS 28, which talks about financial instrument presentation, IPSAS 29, which talks about financial instrument recognition and measurement, and IPSAS 30, which talks about financial instrument disclosure. So what I was about to tell you is that if you know these IASs and IFRS, if you know the IFRS, it's easy for you to be able to also understand the IPSAS because you can relate them with the IPSAS as I have compared them here in my PowerPoint presentation. For example, you will not have an that relate to IPSAS because it's about disclosure of financial information about general government sector, because that is specific for public sector. You will not find one which talks about revenue from non-exchange transactions, because non-exchange transaction and exchange transaction, these are public sector. They are very important when we are talking about public sector. Presentation of budget information. You know, when we are talking about private sector, budget is something which is internal. So it's not reported to the external stakeholders in financial sector. But for public sector, budget information and its analysis on how the budget was originally, how the budget has been revised, the revised budget and actual spending, they are very important in the public sector. And that's why IPSAS 24 gives you a format of how this analysis of the these are cases where probably the applicable standards are not defined, and so you need to go into IPSAS and see what that IPSAS specifically talk about and try to understand it as well. But most of them, as you can see on this consecutive slide, they relate to IFRSs as maybe something you need to consider. If I rush to financial statement preparation, what should we consider here? I've already talked about what to consider in the previous. We still have other 3 topics. So what to consider here? Financial statement preparation. Of course, here, as per the syllabus, they tell you you need to look at statutory financial statement for incorporated entities. Here you will see in my slide, I didn't go into details because statutory financial statement, you have considered IS1 and probably this one, the format you will follow to prepare financial statement that called statutory financial statement, IS1 or IS7 if you're talking of the statement of cash flow. But when you go now to consolidated financial statement, I will probably talk of some issues that are examinable under complex groups. There's also issue of reconstruction and the organization, social responsibility reporting, and environmental accounting in the preparation of financial statement, because we are not talking of only financial statement, but we are talking of financial reporting. So if we report, we have also to report about social responsibility. You know, most of the entity have what we call corporate social responsibility. So how to report about that? Environmental accounting, how the transaction of a given entity affect the environment, and maybe what environmental cost is the company suffering from, and probably how are they being reported. Those are issues that you need to know. And if they ask you about this, you can maybe be able to answer that. Now, as I told you, the first point, I'll not go into it because it's related to what you see. Normally, when you talk of statutory financial statement on this first point, what you need to know is if, for example, it happens, which has most not been the case, that they ask you to prepare this financial statement. In most cases, you need to know how to prepare them in terms of how to adjust the additional information that relate to the standard that we have just talked about. Because in most cases, if they ask you this, they will ask you about the standard. And why you also need to recall is that on the statutory financial statement, they might not ask you to prepare the financial statement as a full set, like they ask on financial reporting, but they might ask you, they give you a standard, let's say IAS 36 impairment loss. They tell you the asset of this entity have impaired, and they give you maybe the value in use, the fair value less cost of disposal, and you have to estimate the recoverable amount. They also give you, let's say, the carrying amount of those assets, and you have to calculate comparing the value in use and the fair value less cost of disposal. You get the in that case you get the recoverable amount, and you compare that recoverable amount with the carrying amount. If you find that the recoverable amount has probably been lower than the carrying amount, you say, I'm reporting my asset at a value that I cannot recover because the recoverable amount is low. It has gone below the carrying amount. So they might give you such information that related to asset, and they don't ask you to prepare all the financial instrument, all the financial statement, but they tell you, make a report on how these assets will be reported. So ideally, you should be able to understand how those are reported in the financial statement. Or probably they might tell you, prepare extract of the financial statement to show how these impairment losses will be reported. And for some assets, they might even give you cases where there is no impairment loss so that they see whether you can be able to identify where impairment loss is and where it is not. They might also give you an employee benefit and they ask you plan asset, how will it be recorded? The related cost, for example, how will they be recorded? They just ask you extract. You cannot be able to prepare extract if you cannot be able to prepare full statement. So you need to understand the full statement first, but also be able to look at extract of them depending on the information they have given to you. Now, for complex group, it's one of the question on the financial statement preparation. Notice here, when I write here FS, I'm talking about financial statement. So financial statement preparation, in most cases, you will be asked to prepare consolidated financial statement, but under complex group. And you need to called basics. The basics that do with IFRS 10, IFRS 3, IAS 28, IAS 27. These are standards that are relevant because IFRS 10 is the one that talks about the financial statement, where it says consolidated financial statement, the asset, liability, income, and expense of the parent and the subsidiary are reported as if they relate to a single entity. IFRS 3, I've told you, it relates to the goodwill. IFRS 28, it tells you if you have an associate. So you need to record those basics. Number two, focus on complex structures, including subsidiary, acquisition during the period, step acquisition, disposal, consolidated statement of cash flow, including acquisition and or disposal of subsidiary. Those are issues you need to consider. Now, if I talk about some of them, because again, I cannot talk about all of them, under complex groups, there is a case, for example, of subsidiary. Look at this slide, and if you see, for example, H has invested in S by 90%, but S has also invested in T by 80%. You can see that H has 90%, and if we look at S investing in T, if actually H has control over S rather, it's like H indirectly also control T. So if they ask you to consolidate, you will consolidate all the three companies. But you should be able to calculate the percentage of ownership that is held by the parent company in the subsidiary, because it's very important you look at that percentage of ownership, because you need to understand if you consolidate T and it is H which is consolidating the whole group, will you consolidate it using 80%? And the answer is no, because 80% would be used if S was consolidating T. So on the case of H consolidating T as a subsidiary, you will take 90 times 80, which will give you, of course, 80 times 90, and you divide 100, you will find it's 72%. So this 72% is what we call effective ownership. And this is something you need to take care of when you have a subsidiary, because if you take 90 times 8% and you get 72%, it means when you consolidate T, of course, consolidation being made by H, which is the ultimate parent, you need to know that T is 70%, and thus, and controlling interest there is 8%, which is made of both indirect and direct non-controlling interest. While when you consolidate X with S, you will use still 90, 90 and 10. Now, it is important to also note that, for example, if you have the second situation, 70-60, that is like, for example, if you take 70 and you are trying to get effective ownership, it is 70 times 60, and probably that will give you 42%. Now, the question here is, if you have 42%, will H consolidate T, since it only has an effective ownership of 42%? That is the question. And the answer is yes. It will still consolidate, but of course, when it is consolidating T, it will use that 42%, while the non-controlling interests will take 58. Why will it consolidate? Because if you look at normally why we consolidate because a parent company has control. The percentage might not be the determining factor. We consolidate because the parent has control. So the ownership is not more than 50%. But since H controls S and S controls T, because you can see S has 60%, and unless otherwise is specified, S controls T. So H can control T through S. And that's the factor that we read as consolidating T, even though maybe the effective percentage of ownership of H is 42%. But when we consolidate, we use 40%. We still consolidate add our asset, add our liability with those of the subsidiary A, with those of S as well. So the three company will still be consolidated. Now, take note that when you are trying to consolidate in case of the sub-subsidiary, you need to check what is the effective date. What is the effective date of consolidation, especially when you are consolidating subsidiary? Because sometimes the parent acquires the subsidiary before the subsidiary acquires the sub-subsidiary. That is, H acquires S before S acquires T. So in that case, it is simple because then H will consolidate T when S acquires T. That is at the later date after H has acquired S. But again, there is this case where H acquires S if S has already acquired T. And what is the effective consolidation for H? Of course, H cannot consolidate T. Even though S had acquired T area, we cannot say that H is going to consolidate T at that area yet H was not yet having control over S. So the effective date is very important. You need to check when do we start to consolidate this sub-subsidiary, because the date of acquisition of the subsidiary might, and is severally the case, might be different from the date of acquisition of the sub-subsidiary, and you need to be sure about the date. Why is it important? Because you remember when we consolidate, we calculate goodwill, and we calculate consolidated retained earnings and non-controlling interest. Now, goodwill uses the acquisition reserves. So the date of consolidation, which we call effective date, is paramount because the date when maybe H acquired S is different from the date when S acquired T. Maybe H acquired S in, let's say, 2017 and S acquired T in 2019. Maybe the reserves that were there in T in 2017 when S was being acquired are totally different from the reserve which are now in T in 2019 when S acquired T. So the pre-acquisition reserve in that case totally changed. So we need to really be careful about what is the date of consolidation in this case of sub-subsidiary. And another is a D-shaped structure. The D-shaped structure is a structure where we have the parent acquiring investment in the subsidiary, and the subsidiary also acquiring investment in another company, which might be an associate. In this case, for example, an associate S, Q is an associate S, but again, because the parent has acquired 70%, this is its subsidiary. But if we take it, it controls S, and 40% that can be controlled. If we add them to 25% that has invested directly, they might be added up 40 to 25, or let's say if you had even take maybe 70% of 40, if you had 70% of 40, it could be 28. 28 plus 25, it could be 52, which is, of course, an indication that actually even Q is controlled and still needs consolidation. So these issues of effective ownership, you have to calculate them under cases where the parent has directly invested in a Q. The effective ownership becomes greater than what would have been if we had taken 70 times 40. Because taking 70 times 40 would have meant that this is the control of, or maybe the investment of B through S in a Q. But P also has another investment Q. So its effective ownership in that case changes because we will take its indirect ownership through S plus its ownership which is direct to Q. So those issues, you need to know them as you calculate, and be sure you understand the percentage to use when you consolidate. Another thing which is also very important to remember and recall is change in group structures. That is one, media acquisition. You start the year when no subsidiary, no additional subsidiary, but maybe during the year there was acquisition of the subsidiary. And it's very important to remember that if a subsidiary has been acquired during the year and you have to consolidate, there is consolidation of statement of profit or loss and consolidation of statement of financial position. When you are consolidating statement of profit or loss and the acquisition took place during the period, we will have to consider the fact that we have to pro rata basis consolidation. That is, in the income statement, we will be consolidating using a proportionate number of months we have acquired the subsidiary. For example, if we have acquired in June and the year ends in December, we will consolidate income and expense of the subsidiary, taking a proportion of 6 out of 12. So that is important to remember, because again, it has been a case that students are asked to answer a question where acquisition has taken place during the period, and instead of taking in the income statement the pro rata basis of consideration where they have to prorate the number of months, the income and expenses, they actually consolidate everything. And that is a huge mistake that has been done by the student. And obviously you will lose the marks for that income statement completely, because it's like you did it wrongly from the word go when you started by adding everything. Instead of taking 6 out of 12, if, for example, they had acquired in a June, not July, actually, because if you start from July, that's when we have 6 months. Because if it is June, it will be 7 months out of 12. So that one you should be careful. And remember, I have mentioned, if the acquisition during the period takes place, you consolidate the income statement or statement of profit or loss and other comprehensive income using the proportionate number of months, but it doesn't apply on a balance sheet. It doesn't apply on a balance sheet because the balance sheet is a statement of financial position as at a given date. It's not like an income statement which is for a given period. So you should be careful on balance sheet. Don't do pro rata allocation of the asset and liability unless you are calculating pre-acquisition and post-acquisition profit, because maybe in the retained earnings you have in the balance sheet, there's a profit for the year, and you have to look at how much is pre-acquisition in that profit and how much is post-acquisition. Otherwise, the asset and liability, they are not taken like that. In the case of step acquisition, what is important here is to be sure of when do you start to consolidate, because they might tell you the company had an investment of 10% and it has invested, let's say, another 10%, and later on it invested another 30%. Now, investment that is less than 20, we normally report it as per Ifrs 9, financial instrument, recognition and measurement. And it's either measured, in most cases, measured at fair value through profit or loss, and it can be measured at the fair value through other comprehensive income if you have taken a recoverable approach to measure that instrument at that value. If you shift and maybe you invest such that the percentage has gone beyond 20, let's say 25, 30, but before it reaches 50, then it has shifted to be reported as a simple investment. It is now to be reported as an associate. And if it, in a case it reaches 50 and it's a joint venture, we apply IFRS 11. But we will start to consolidate if the control has been acquired, and in most cases more than 50%. In that case, we start consolidation if it happens. Now, another thing to consider is, apart from okay, here we are talking of in case there is a step acquisition, you measure the previously held equity interest to fair value. That is if there is a step acquisition like in the previous slide, you have to remeasure the previously held equity interest to fair value, recognize the gain or loss in the P&L account. That is after there is increase in investment, then calculate goodwill and non-controlling interests, of course, using partial or full basis, depending on whether the goodwill that you have also to calculate, you have been given fair value of non-controlling interest. So if there is step acquisition, of course, you need to look at what were the previously existing investment and remeasure it. After remeasuring it, recognize the gain or loss. After recognizing the gain or loss, then use the current value with the measured value and calculate the goodwill. Another, of course, change as I go quickly is the disposal. Now, for disposal, I want to go quickly and tell you that what you need to consider is if the disposal has happened, have we lost control or we still have control? Now, if we have lost control, there might be these situations. We might have lost everything has been. In that case, recognize again or not, it is because everything is lost. In case there is disposal of part of shareholding and maybe remains with some interest, we recognize the gain or loss subsequently using equity method of accounting if we have stable associates. If we have recognized, for example, we had 8% and we sold some shares such that we keep 30%. So it means that 30% means we report it as an associate subsequently. So it's not always the case that when there is disposal, that there is no investment recognized in non-current assets. Sometimes we might recognize subsequently of accounting being used. On the case of disposal, where probably we're saying we have a trade investment. Of course, here, if for example, we had 9%, most of our share and we remain with 10%, in that case, we have a trade investment which should be recognized as per Ifrs 9, just looking at applicable measurement. Now, this is how we calculate the profit. We look at the sales proceed, and in the case of disposal, there is a profit which is calculated in individual financial statement, and there is a profit which is calculated when we're looking at consolidated financial statement. For individual financial statement, you will look at how much is the sale proceed that I have received, and what was the carrying amount of the share. The difference between the two will be a profit or loss that we'll have to recognize in the P&L account. That is in separate financial statement. But when you look at now consolidated, this is how you will normally calculate the gain or loss. You will look at the disposal. If there is any investment which is retained, like in a case where I was saying you can retain an associate or retain maybe a trade investment, that is a simple investment as per Ifrs 9, you will look at that fair value of it and add it to the sales proceed, because it's like, in addition to the disposal proceed, you also have the fair value that is remaining. So you will take all of this and you less the interest in the subsidiary that has been disposed. And that is the net asset of the subsidiary, the goodwill at disposal date, and of course, add all this, remove the non-controlling interest at disposal date because it's not actually yours in that case, and compare what you received as disposal proceed with the fair value with the net asset of the subsidiary disposed, and see whether you made a loss or gain. And of course, this is very important to note in this case. Now, what is also something to note is no gain or loss recognized when control is lost. Actually, this is a mistake I have made on this slide. It was supposed to be no gain or loss is recognized if control is not lost. It's not is lost, is not lost. If the control is not lost, you will not recognize any gain or loss. You will only see, if you, for example, this is a situation where you had 80% and you said, and you remain with, let's say, 70%. Did you lose control? No, because whether it's 80%, you had control. 70%, you still have control. So in this case, you just look at, when I had 80% and controlling interest was 20%. When I have now 70%, non-controlling interest is 30%. So what is that change? That change, you adjust it in equity by, of course, reducing equity, increasing non-controlling interest, but you don't recognize any gain or loss. So this formula kind of here is used when there has been gain, loss of control, either creating an associate or creating a trade investment or remaining with nothing at all. In that case, you will calculate gain or loss. Since you didn't lose control, you just look at change in equity and the change in non-controlling interest, but no gain, no loss is recognized. So that is a point to note in the case of this. Again, other issues to consider is foreign subsidiary. I've talked about this, and I think I don't need to reconsider this because translation rules are in S 21. If you translate a foreign subsidiary using average rate, using and the gain or loss that results from there, whether it's a reserve that goes to statement of financial position or it goes to P&L, that one you still need to recall. Another question that you might expect is a question on the consolidated statement of cash flow under these complex issues. And what you need to know is how to determine maybe in case you are in a consolidated statement of cash flow, the other things will be similar except on goodwill, because goodwill you need to look at impairment, and maybe if you're using indirect method, consider if the goodwill has impaired and consider adjusting the profit before tax by adding back the impairment loss. You also need to be able to calculate the dividend paid. And for dividend paid, maybe there are some dividend paid to non-controlling interests, the shareholder who are the owners of non-controlling interest, or dividend paid to the owners of the parent. The dividend paid to the owners of the parent will be calculated using retained earnings, while the dividend paid to non-controlling interests will be calculated using non-controlling interest account. So here you need to consider, because normally when you're preparing the statement of cash flow, I have told you, they give you two consecutive statements of financial positions. And in those two, you will look at the non-controlling interest you had at the beginning and compare it to the non-controlling interest you have at the end. And probably it will have increased. And why does it increase? It might also have decreased. And why does it decrease? The increase or the decrease might hit you one. Maybe it is because of the profit for the year. And the profit of the year, where do you get it? You get it from the P&L. So you will go to the P&L and see how much is attributable to non-controlling interest, and add it to the balance brought forward, see whether the non-controlling interest has increased in that figure. But it might also have increased because of acquisition of a subsidiary during the period. So if there has been acquisition of a subsidiary during the period, you look at how much is the non-controlling interest from such a subsidiary and increase it. And compare it with the closing balance and say, okay, the closing balance, if maybe you take the balance in the non-controlling interest at the beginning, you add the profit for the year, you add also the non-controlling interest acquired in the year, and it doesn't get equal to the non-controlling interest at the end, then you will know there has been probably dividend, and you need to calculate that dividend paid and take it to the statement of cash flow in the financing activity. The same can happen, the opposite rather can happen if there has been a loss, because if it's a loss, it will not increase the non-controlling interest. And if there is disposal, we might also not continue to recognize the non-controlling interest for a subsidiary that is disposed. And in that case, instead of increasing non-controlling interest, we might consider comparing it with the one remaining balance carried forward and see again whether there has been a dividend paid. Another thing you need to know how to do is retained earnings while calculating dividend paid to the owners of the parent. Here, you need to specifically look at, again, retained earnings that were there, the one that you have, of course, were consolidated, and look at the profit or loss attributable to the parent, which is, again, in the statement of profit or loss, how much is it? If you look at that profit attributable and compare with the retained earnings at the end, can you be able to see the dividend paid? And that's also very important. Another issue is if there is an associate, you need to look at whether there is any dividend received from associate, because dividend received from associate might also be in a consolidated cash flow if we have associate, because in that case, the dividend received will be an inflow in our investment activity. So what investment did you have at the beginning? What investment do you have at the end? That investment can be increased by the share of profit, for example, from associate, which is also reported in the using equity method of accounting, or it can be a loss, which is also reported in that case using equity method of accounting, because whether it's a loss or a gain, we still report it. So that one you still need to consider it. If the statement of cash flow is asked and you need to consolidate it, those issues you need to consider them very well. I will say that the issue on complex, but of course, I have tried to look at some that are mostly tested, maybe looking at this past paper, but remember past paper is not always future paper. So we use it to revise, but it should not also take our whole attention. We should think of other ways the exam might be asked. Complex groups, we also have other issues to consider. I have already talked about this. The construction and the organization, what do you need to consider? Let me go quickly so that I leave some time for you to ask questions. You need to read on why an entity may need reconstruction. Of course, because maybe it has financial difficulties, and maybe in that case, the organization or reconstruction. Maybe some stakeholders might be required to surrender their claims and they don't claim. Why should they maybe decide to do so? And how that construction takes place if they decide to do so? Those issues might be under construction, and probably you need to look at that. Social responsibility and environment reporting is also one of the things you need to consider here. Consider reading on sustainability reporting. Most of the companies do sustainability reporting, where they report on corporate social responsibility reporting. You can even take some of the reports that are available for public companies and look at what they have put under social reporting for you to inform yourselves and know if they ask you a question about social reporting and the cost that relates to those, how similarly you can also reproduce that information. I know most of you have limited time because of the day-to-day work, but try, get a report of one or two companies, see whether they have reported on corporate social responsibility and see how they have done it. And if they ask a question in exam, you can relate and also answer it. Environmental reporting, in most cases, some companies report it as part of the notes to the financial statement, but there might also be a separate report aside, which is produced, which relates to the environmental issues. For example, operations that are polluted, and maybe it has taken measures to reduce pollution, and maybe it has reported about it, the cost that it has incurred to reduce pollution, and if that is there in the environmental report, it might be there. So you need also, again, to consider the extent to which environmental reporting is an issue to consider here. The last but one topic is analysis, interpretation, and evaluation. Here, the syllabus ratios. What to consider? Of course, here you consider the ratio and the cash flow. The cash flow can be analyzed from the statement of cash flow as well. Sometimes they will ask you to analyze the cash flow, but also by comparing and the cash flow perspective of an entity. Now, for the ratios, you have several categories of ratios: liquidity, investor market ratio. You need to know, for example, under liquidity, which ratio can I use if I want to analyze liquidity? Current ratio, current asset over current liability. Quick ratio, you will take current asset minus inventory and divide by maybe the current liability. Sum, gross margin, net margin, return on assets, return on equity, return on capital employed, activity, maybe payment period, account receivable collection period, inventory turnover, asset turnover, they are there. Solvents, what the other ratio do we have there? Maybe recall, go and look at ratio, leverage ratio, or what we also know as gearing ratio. Times the interest earned, or maybe if you're not talking about interest cover or interest coverage ratio. When you go to the investor ratio, you go back to IAS 33, earning per share, dividend per share, earnings yield, price earnings yield, dividend yield. Those ratios that are of interest. But the importance of ratio here is not to be able to calculate, though you cannot be able to interpret if you have not yet calculated. At this level, what matters is the ability to what case do I have? For example, they have given you financial statement that from 1 year to another, 2 consecutive years. They want you to look at the trend. If, for example, you're calculating accounts receivable correction period, has the account receivable correction period deteriorated or improved? If the number of days have increased, what does it mean? Does it mean that we need to impair such a financial asset? Or does it mean that maybe we need to reduce the provision or increase? The issue that you discuss out of the ratio is what is important than calculating the ratio itself. Because as you know, the ratios are not final, they are not actually final, they have to get it to make sense. So you really need to be able to look at each ratio. If it relates to the liquidity, when you have calculated it, what does it mean to liquidity? You will find issues where they give you questions where you might interpret company. They give you, in most cases, they'll give you companies that are rated, but let's say they give you companies that are not rated. They give you a manufacturing company and a service company, and you calculate ratio, maybe say one has inventory turnover which is high, another doesn't have inventory turnover. Would it be necessary to compare those companies? Maybe not, because one doesn't have inventory. But probably if you had calculated profitability and maybe you are looking at the total asset turnover, and you say one has a lower total assets turnover because it has a lot of non-current asset because it's a manufacturing company, and another because, for example, it's a consultants company. The total asset turnover for a consultants company, which is a service company, is too high because they have less asset. And probably you might tend to say, this one which has a total asset turnover is the one that is high, it's the one that has performed well. But it might not be the case. Maybe the one that has performed well, only that they cannot have in any case the same asset turnover because one has a lot of assets because it's a manufacturing company, and another has less asset because normally it's a consultant. And when you go to profitability, probably you might find that when you continue to profitability, the one in manufacturing has done well than the one in service. Of course, it's difficult to compare companies that are not similar, but it doesn't not mean that they cannot be compared because some investors invest in unrelated businesses and they want to understand all of them together. And you can help them to understand that. Remember, you are trying to inform them. Now, topic 5 is like, what is new or what are the emerging issues? The emerging issues here, you might look at the new standard like Ifrs 7, insurance contract, Ifrs 16, leases. You might also need to consider what is the effect of COVID-19 on reporting. You might not get surprised if, for example, you get a question out of this area. Or what should people consider on assets, for example? Should they impair them because of COVID-19? Does do we have maybe some industry that have assets that have impaired than others? So what do you have to say about COVID-19 and relating it on the applicable standard? Please try to read about this issue. Now, and maybe what I think you need to consider, I just summarize because in 3 hours, probably it is so difficult to go into the details of advanced financial reporting, and you might maybe concur with me, but normally what are the for you to maybe make the best use of this current lecture that you have had and try to exercise it and make it. One is I'm talking about keep the in mind as you revise. That is currently up to the date of the exam. One, the IFRS amount more than 3,000 pages. So consider retaining key points on each. Here I mean you might not exactly know everything is covered in the standard. But this what does it say on measurement? What does it say on just keep that. And since they are too long, there is a website which is called when you go to this website and put a standard and search for it, it will not give you a full standard. It will give you a summary. So you can use that summary to revise the standard because it doesn't give everything. Of course, it gives you much, but it doesn't give you everything. It can be helpful. So check for it and get those short summary for any standard. Another thing, be able to interpret and report on issues related to application of standards and figures in the financial statement. What am I saying here? The examiner knows that you are at an advanced level, so you need to know how to communicate the standard. You need to know how to communicate the information. So you will find questions that ask you about the standard. They ask you actually about an issue that happened, and you need to report it. First of all, you need to understand what relates to this standard and what is the issue, and be able to explain in a such way that even a non-accountant can be able to understand it. Because after all, financial reporting is about communicating to stakeholders. So I always ask yourself, what does this information mean for the business? Yes, the earnings, but I have calculated it. What does it compare to maybe it means that an investor who has invested in this, if this investor is earnings, high earnings, and for example, we have two investors that are different. One who is a risk averse, and we are paying a lot of dividends. The risk averse for that company which pays high dividend, when the risk taker will opt for the company that pays less dividend, but has a lot of earnings. So the interpretation and the communication with the stakeholder is very important. And you will see questions at this level. They want you to know that and be able to relate with the issue you have in a question given. Of course, another tip as you revise is this course is practical. So since it's practical, the only thing that can help you to pass is practice, 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 practice. You keep looking, you have try to use them, see what the examiner has been focusing on. Because there is a reason why the examiner is focusing on certain areas, and he has asked them in the first sitting, second sitting, third sitting, why don't you think it will also be there in this sitting? There is a reason. So practice, practice, practice. There are a lot of areas where you can practice from. Past paper of ICPA. There are also other comparable professional courses like ACCA, like CPA, and those are comparable. You can get more questions than you need and you will have to check them, see how they have been asked and what the examiner specifically wanted you to know. Did the examiner want you to know how to treat investment in associate? Did the examiner want you to know how to treat an acquired subsidiary during the period? What does the examiner want? You need to really consider practice. Now, during the exam, first of all, I have seen students who rush the answer before they read it. Friend, it's very important you consider the requirement. That's why they give you 3 hours and 45 minutes, and 15 minutes are for you to read the general requirement. But also you should read the specific requirement of the question. Never start to respond to the question before you understand to read the requirement. I have seen because I'm a lecturer, most of the students, you give them a question, they didn't understand what was the requirement, you have asked extra, they prepare the whole statement of financial position, and you only ask. So you will find you have spent an hour on a question, and that question was allocated only 15 minutes. So be careful about what is the requirement. Don't care much about how long the question is. You might find that an answer is a short right. Be sure you understand the requirement first. General and specific. I think at your level, this time, you know how to read, how many questions to attempt, because again, I've seen a student who attempt more questions than required, and you find that none of the questions they have attempted correctly. So please do not rush answer if you do understand what the question requires. And again, give your best shot first. What does it mean? Start with the most easy to you. See, okay, this one, I think I have revised it and I know what to do and I can do it very quickly. Start from there, earn the easy marks. And remember, earn the easy marks means do what you can in the period which is given to you. So you can only do that if you start from what you understand the best. So always don't bother about what question is the easiest. In those 15 minutes they give you, you can scan through and see a topic you have revised very well. And that topic you have revised very well, you can start from there and earn those easy marks. And I'm also telling you, for questions that require preparation of financial statement, elaborate your workings. Why not? Why do you normally prepare these notes? In the notes, so many students rush to put figures in the financial statement, and they don't care much how they elaborate their work. For example, you're calculating goodwill, you're calculating non-controlling interest, you're calculating retained earnings, and you bring the final figure, but we cannot trace your workings of how you calculated those figures. A final figure might be wrong, but note their marks allocated to notes that you have prepared. If you don't prepare those notes, you have lost those marks. And maybe you have thought while coming up with the final answer. So why would you do that? Please try as much as possible and do your workings very well, because those workings are allocated. Even if it is 0.5 or 1 or 2. But if you miss 0.5, you might get 49.5 and you don't pass. Maybe if they don't deliberate you. So in this case, then you should be sure 49.5 is different from 50. And if I have to get it from workings, I'm sure my workings are clear. There are people who do workings, they do it in a way that is not neat. Make them neat that I can, maybe if I am the one who is marking you, let's say, I can see it and mark you. If I can't see it, I will give you 0 on that. So please be careful. Notes are very much important for cases where you are preparing financial statement. And again, try and this is very important. There are people who have maybe 3 questions to attempt, they only attempt 1. When you attempt 1, probably you have failed already. So the full paper as it is required Of course, here I'm not saying don't to attempt what is not required to attempt. If they ask you to attempt 2 out of 3, attempt those 2, but make sure you have attempted 2, not 1, because the more question you attempt, the higher the chance. And of course, this. Don't refuse to attempt a question because you didn't study it. I am a tutor today, but I've also been a student. I did this exam. What I know is sometimes you try to come up with a format that you don't know, and because you know the financial statement, maybe they have given you something on public sector, you just come up with an income and expenditure, you put things there, and they end up being true. What you can't do, don't leave the space empty. Because if you leave the space empty, you are giving the examiner and the marker the time to say this one has totally failed, to put 0 quickly, instead of thinking maybe around what you have tried to do. So please try not to leave empty questions unattempted. These also think of quality than quantity. Sometimes you don't need to write too much. You need to write what you really understand. Time management, what do? We have 3 hours and 45 minutes. We have 15 minutes. Use them as they are given. Even on instruction, ICPA will tell you, use 15 minutes for reading instructions. So use them for reading instructions, because you might fail because you did not understand the instruction. Use them to read the instruction. Section A has question 1, and in most cases it is on complex group, and it has 50 marks in most cases. If you look at the first paper, probably use 1 hour and 30 minutes on that question. Time yourself. If 1 hour and 30 minutes are over, and maybe in that case, what you're doing, actually, you're trying to think around what you know you have already done it. Leave it. Go to section B, give 45 minutes for each question. Again, time yourself. I'm sure the questions that are there, having 5 to 5 marks, you can do them within 45 minutes. Time yourself, and again, if 45 minutes are exhausted, again, what you're doing on that question, you're trying to think around, but what you know, you have already done it. And you have the 30 minutes remaining. Now, that's a time to think around. There is something I saw, but can I remember this? The note, it's not, let me open the note and see if I can find an answer. Try as much as possible to use those 30 minutes to fill in gaps where you think you can fill in gaps. And of course, another, the fact that it's an open book, there is a temptation that for every you are going to open. For every question you're going to open the book. Don't do that. Prepare yourself in advance. Open a book when you think you have done what you know. So first do what you know and leave the space for what you don't know. Then what you don't know, come and open the book. So don't go to the exam unprepared because this is an open book exam. No, prepare yourself, go to the exam when you're prepared, and make sure when you reach to the exam, you have your books maybe, and you can only refer to them once you have done what you know, and you are checking what you didn't know. And if you find it, fair enough. If you don't, maybe the time will tell you, go, this one, you cannot answer it, but try as much as possible not to get tempted to open the book every time you find a question, because that will take much of your time, and you might find you're not finding answers. So be careful about that. Now, for questions that are requiring the application of standards, in most cases, these questions will be required, and they will ask you to apply the standard, but by reporting it to the stakeholders. And you need to do a report. Now, when they tell you to do a report, it's like you need to address yourself to someone. Most of you are working, those who are mostly in public sector, or even those who are in private sector. When you write, for example, internal memo, you write from this office to this office, and you put the date, and you put the which is the object of Y, and you put this is a report on this and this. So do the same in the exam, because the format in the exam, when they ask you to report on a given issue, the format is also marked. So there are people who they are asking to do a report and they rush to write the answer without introducing. For example, identify the problem which has been given, and you introduce. This report is designed to give a guidance on which they are prepared. Let's say, for example, but what I'm saying here is, if they ask you to report, do the format of reporting the same way you do the format in your usual. You don't just send a memo or an information to your director in a format the way it is, the way you just feel like. You have to come up with a format. So what I'm saying, as you come up with the format, of course, from who to who, the date, the object of the information, and you start to introduce. Now, as you start to introduce, you might go and maybe in introduction or slightly in the development, you need to quote the applicable standard. And where you start from, give the guidance from the standard. What does the standard talk about on the issue that they have given to you? Now, after you have given the guidance of the standard, explain the problem and then link that problem to the standard and give a solution, because in most cases, they are looking for a solution. What is your solution? What is your proposed solution? What should be done? Should we impair? Should we not impair? If we should impair, for how much, depending on the information you have. Remember to conclude your answer in case of reporting. In case it's reporting, of course, you can even write don't safely and sign. Why not? It's a report, maybe it's a letter you are writing and you have to sign it. And in that case, you put it a conclusion, you say, given this factor in, and I think we should do this, the course of action you have proposed, and you think and conclude. That is it. If it's a report, you need to observe that format. It's very important in a case you are answering. So I think those are my words, those are my guidance. I will give a floor to maybe the moderator, and I have taken too much time, I can see, but it was necessary. I hope what I have said has helped you, and I hope that you're going to use it. But before guidance lecture, guiding lecture, the following on your interventions. Thank you very much.
Thank you so much, Olivier, for good presentation. And now it is time for question, comment. So anyone with comment or question can raise a hand and I give him or her the right to talk. Ronald?
Yes.
How are you?
I'm fine.
How was the presentation?
The presentation is well, and we have recalled something new. We are happy to get it.
Okay. Do you have a question?
Yes, I have.
So you can ask to Olivier.
They have said that it's an open book exam. And I wonder if there is a limited number of books or if I can use any book I want, or the books that are published by IKIPA are only the one to carry in the exams. Thank you.
Okay, thank you so much to Shimiman. There is no limited books you can pick or take any books which is relevant to paper you are doing.
What about the number?
No limited number.
Yes, thank you.
Bring as much as you can.
And Zimpura? Jean Dodi.
Hello. Hello.
Hello.
Hello.
Hello, Jean Dodi.
I can hear you.
You can ask any question or you can give any comment.
Are you catching me?
Yes.
I'm thankful for this platform you created for revision first. But I'm wondering two questions or three. One is those courses which is not listed on revision timetable provided. What will you do? How or what do you plan to do so?
Okay. The second one.
The second is there are some courses that have been passed without attending them. Are you having some plan to come up on them?
I think Strato can react on that. Strato, can you react on that?
For first question, we do this plan based on problematic papers. So we don't have a lot of time to do all 18 papers plus 11 papers of CAT. So the remaining time is 0, which caused the ICPA to look at some paper with previously has low passes. So the other paper you can look the way you catch up and you can discuss with other people. So you can make platform with other people so that you can pass the exam. So there is no other time or other paper in planning to do such revision.
Okay. I can on.
Hello?
Hello?
Yes.
Yes, please.
So, Olivier.
Yes.
So someone has comment. The presentation is good, but information to cover is still huge. Would you like to request Mr. Olivier to point on exam setting format or specific area?
Okay. If I react on this, I have on one slide talked about it, but if you look at the exam, the way it has been set previously, there is a question which comes on complex glues. And this question carries 50 marks. So if I was a student to do this exam, I would get to give this area much of my time But number two, I have also told you there are some standards that are tested at these levels because they are not tested at previous levels. That is IAS 19, which talks about employee benefit. That is share-based payment, Ifrs 2. And currently, there is also Ifrs 5. So those one also, you should put a lot of emphasis because they have not been tested previously. So you should have really to look at them, because if again you look at the past paper, they have been tested more and more under this paper because they are not tested previously on other papers, financial reporting or financial accounting, the prerequisite. And probably IAS 21 has also been tested on a case of applying IFRSs, and IAS 36, especially on a case of impairments. So probably I will not go further to mention more, but those ones are mainly areas of focus. And I don't want to say that maybe Olivier has said these are the areas which will be in the exam. These are just what I think as someone who has been in this area and who has been observing the format of the exam, that should be probably your focus, of course, without maybe ignoring the others.
Thank you so much, Olivier. Basir Bashimirimana, Brace Sword. Brace? Toshimimana, do you still have any question to ask?
Yes, I have another question. When revising, sometimes we make summaries. Is it handwritten books or papers allowed in exam, or is it allowed to bring the handwritten books or materials?
Any kind of material is allowed.
What are your perspectives on other modules like auditing and strategy and leadership? We have not seen the link to register for these modules.
For strategy and leadership and auditing, those paper is understandable. You can sit around and reading. So once you read and practice, you can pass paper without much attending classes on revision session. So there is no plan to have strategy and leadership or auditing.
Okay, thank you.
Welcome. Brace. Olivier.
Yes, please.
There is another question for you. I want Mr. Olivier to point on tips to pass wrong question. ICPAD is used to distract the candidate from wrong question. Why for ACCA it is easy to extract the information and the requirement. There is a need to change exam format and bring contain the short question. I always revise ACCA kits. When set for ICPAD, I pass at around 50.
Okay, I think this is more on the format of the exam than it is technically maybe possible, but I will say that any exam is doable within the time given, whether long, short, medium, normally the examiner, when you look at the IFR, the way maybe I think they do it, they do what we call moderation. They do moderate. And the question might be wrong, not because normally it is structured, because actually it is trying to help you understand. I'm not just saying that maybe you said it's not correct, and probably a point to take is you are trying to also tell ICMA, which is also represented here, change the format, make sure that the format is maybe convenient. But I think if you ask me now the tip, how to pass long questions, the long questions in most cases are questions of preparation of financial statement. And on the preparation of financial statement, you need to first know which financial statement they have asked. So what you do is, even before you go to balance, first go to the additional information. Read them and see what they really need to affect. That is the starting point. Additional information. After you have looked at the additional information, then open your books. That is, if you prepare, if for example you prepare a consolidated statement of financial position, then give space for non-current asset, current asset, equity, and liability. And go to the trial balance or financial statement. If you have financial statement, you need to consolidate. When you go to the financial statement, just if you, for example, you consolidate, start with addition because I think those figures that they have given in the financial statement, now, because you have read the additional information, you know each additional information and what they affect. So as you try to write, for example, you are writing an statement, and there's an additional information that has been addressed, you address it as you really try to answer. So from the additional information, the financial statement, and for example, after you have dealt with additional information, try to give it the item of financial statement. That's my advice on the financial statement. For other questions, first understand the requirement. And the requirement to look for. If you're looking for information, maybe the period, will be needed. So just start from the requirement and try to see what information is that requirement before you read even the question as a whole. I think that's what I can give as a if it helps, well, but again, maybe that's how we I think the format so far is manageable.
Thank you so much, Odifi.
Okay.
Another question?
I only see someone has said it would have been good if, for example, this has maybe presentation had taken an approach to the question and maybe explaining the approach to use. Probably this one, they understand your concern. Maybe it was not easy to get question really could represent others. But what I can do maybe is look at one question to prepare maybe an approach to it and share it with Strato so that he can share it with the students. See, approach is expected maybe for such a question which is too long, and how maybe do you detail your work? I think can help. I will try to do that. Like use 2 questions and give them to Strato, and he can share them with you. Is that okay? The one who has asked, I think, is so I think that one can help you.
Adam?
Yes, Strato. Is there anyone else with a question?
So I am looking at Q&A box. Someone, can we hope that examiner will consider that we did attend class while preparing the exam? Is there any possibility to share with us this presentation? Yes, of course. Latest tomorrow, I will share the presentation together with video for today's session. I think all question is over.
Yeah, all the questions, chats, and on the Q&A have been done.
Anyone remain with question? I think if everyone at this platform have been satisfied, let us take this time to thank Olivier for your good presentation.
Thank you very much as well, Strato.
And I also thank the participants for today's session. I think this will make a positive impact for pursuit of advanced financial reporting for December 2020 examination. Thank you so much, Olivier, and thank you so much all attendees for today's session.
Thank you, Strato. Have a good night.
Okay, thank you so much. Let us close this session.
Thank you. Bye.
Okay.